Oh, okay. We're live. This is sort of the pregame show. You know, we have a couple minutes yet, but
Just about a minute to spare.
not a minute to spare. There's a lag time between Zoom and everything else, you know. Sam, is it raining where you are too?
It is storming like crazy. I actually, from where I'm sitting right now, I have a really good view of the ocean, and I've spent all day watching kind of the storm roll in and out. So it's quite interesting right now. It's
Yeah,
so it's dumping, and the ocean's just rocking around. What about you downtown?
rain, just a real frog choker, absolute frog choker. We have, you know, as we've been having internet problems and everything else. Didn't think we'd make it on. Didn't think we'd
Yeah.
make it on. It's
Yeah,
been
you're not
crazy.
supposed to let people know behind the scenes, but it got a little dicey for us here. We had some power outages and weren't sure that we were going to be able to have everything connecting.
And actually, I had a really nice PowerPoint, you know, little iPad presentation done, and it got wiped out. I don't know what's wrong with the file, so we're going to have to do it a little more manually right off the internet. But anyway, it is time to start. I think it's time to start.
Yes,
Welcome everyone to Carolina Retirement Planners Happy Half Hour. And
our
I'm
22nd happy half hour.
22nd. This is Sam Shakavich and I'm David Shakavich. We're partners here. If you're new in the Carolina Retirement Planners, and we always like for people to say hi. So type into the chat that you're here. We don't know you're here unless you say hi. And I see
Lisa's with
Lisa,
us, and
Miranda.
Miranda, and Mary. It's dumping in Porter's Neck too. I think that we're just the whole area is just it's sweeping through here. And Tony, hi.
Yep. And you know, by the way, if you're here, if you're on your Facebook, you can see down below it'll say share. If you click share and then watch party, it'll tell your friends you're watching, and they can come join us too. You know.
Wait. I'm going to chime in though. If somebody's going to do that, they need to let us know so that they get extra credit next week for entries for the wine.
Absolutely.
So before you do the share and all of that, make a post and tell us.
Exactly.
Sorry about that.
Start a watch party, or if you tell a friend about our happy half hours or forward an email to somebody, let us know, and we're going to enter you into our wine raffle.
We ought to give people that do a watch party 2 entries the next week.
We will absolutely do that.
That's a good idea. So if you tell us you're doing a watch party, because that helps people see us and get to know us, and that's always welcome. So you deserve an extra chance at wine. But
absolutely. And Wanda, you're joining us again. Thank you for coming back for take 2 today.
Brad
and Rick, our wine winner from last week. Congratulations.
Rik and Marci, you know.
Nice to know that you came back now, you know, even though you've still gotten the wine.
This morning we did a special presentation for Brunswick Forest, and on their private Zoom group, and that was on social. What was that? Social Security. Ricky and Lucy, yeah. And you know, today is a very special day. You know, we've had Lucy Ricardo, you know, days, and you know, we look at what day.
Each day Amy's so awesome. Each Thursday, she looks it up and tells us what national holiday it is. It's always some kind of random national holiday. And today just so happens to be National Happy Hour Day. So
and perfect. This should be our day. The happy half hour day. Happy half hour day. Yeah, just, you know, it doesn't get better than that. So, and what are you drinking today, Sam?
You know, I feel like we just talked about the happy hour, and I feel like I should be drinking something boozy, but with all of the turmoil outside, I'm just drinking some hot tea right now. It feels right. So I'm
drinking my normal herbal tea, though it doesn't look like herbal tea. Trust me, it is. I only drink whiskey when I'm on the kayak doing broadcasting from the kayak. So, and even then, boy, it sneaks up on you fast at the end of the day. So. Amy, what are you drinking? Are you drinking something fun?
I am. Well, it's pseudo fun. I'm drinking one of those Smirnoff spiked seltzers, but it's pina colada flavor. So I'm pretending it's not raining and I'm being tropical right now.
Oh,
Okay.
that's nice.
Okay.
That's nice. You're doing the opposite.
And let's see, Bill is here, Rich, Kay and Ken, they're both here. They're good regulars.
And Nina,
Miranda,
and
Nina,
and
Darlene, Rick.
and
Just talk-
Charlene,
Hey, Charlene.
and Paul. Hey, Paul, and Jeff, and Leah. Hey, Leah. Thank you for joining us. Oh man, we hope everyone is staying. It's a good day for happy half hour. Being inside, staying dry.
Yeah. So what is our topic for today?
Oh goodness. Well, if last week we had, if you didn't know about this, then I don't know where you've been. We had our presidential election, and
I remember reading something about that.
hearing
Yeah.
something about that. And so one of the things that's on many people's minds is, what does this mean for me? What could this mean for me and my retirement? Is there something I should be doing? Should I pull all my money out? Should I put more money in? Should I, what should I do? So this is what we're going to talk about today.
Okay. So today we're going to talk about the in an election year like this, what should you do? And actually, I had worked out this I was putting together the whole thing so I could do it on an iPad and draw on it, and it all went away, and it was crashing our system, and I don't know, corrupted file from the power failure. So we're going to have to do this manually. And I thought it might be fun to kind of look back and see some historical perspectives over time, what it has meant. And then we're going to talk about if with Biden being elected, or it certainly looks like that's the case. What is his tax plans and what's his financial plans? How might it affect us? And then if we have time, I want to show you my bias and what you really should worry about. Why it really doesn't matter who's elected in the next number of years, because they're all going to have to do the right thing, and if they do, what it means to you. So let's start. And I had planned to do this in a better fashion, but this will be just as good.
So you don't have all your fancy.
I don't have all my
bells,
fancy
whistles,
stuff.
pens.
And everything's going a little slow here with this, somehow with all this stuff. Everything's going slow. We are casting about for a good article on the historical perspective. And this is from Invesco, one of these investment companies. They did a whole article on the 2020 US presidential election, 10 truths no matter who wins. And I don't think we need to look at all 10, but some of them are kind of interesting. Here are the truths themselves. They say the markets have performed well under both parties. Investors are better off staying fully invested. Let's take a look at this. This is an interesting graph, an interesting little chart. And if you look here on the back and forth, the horizontal axis, that is the growth in the economy, the gross domestic product during a president's term. That means the country was really booming. And in the up and down, the vertical axis, it shows what the stock market performance was. You see zero here. Below that is they lost money. Above it, they gained money. What's kind of interesting, if you look at which presidents during their term grew the economy the most, and this is from 1957 to present. That's kind of my lifetime. I was alive all those years, and Johnson and Kennedy had the best growth. They were up in the 5 to 5.5% range per year, over their entire presidency. If you look at who had the best stock market performance. It was Gerald Ford during his presidency. Those of you who were alive during Gerald Ford, I mean, if you were to ask me, you tell me Ford had the best performance? I wouldn't. It's hard to believe, but this is what it was. You can see the Democrats and Republicans are all kind of clustered up here. The two losers, if you will, are both Nixon and George W. Bush. And, they were the ones that the economy, both the economy, the economy didn't do very well. We didn't grow very much, and the stock market. But you can see that for the most part, during good years and bad years, we've had, we have thrived.
I think this next one's pretty interesting. One of the things that they reference, they say investors are better off staying fully invested. And one of the things that they reference is Mark Cuban. In 2016, when Trump was elected, he was so sure that the market was just going to crash and pulled all this money out, and then it ended up, just going up really high. So it's one of the things that I think that we try to teach people is you don't want to play that game.
Yeah. In fact, this little graph here shows since 1900, it shows the growth in the market, what the growth at $10,000 in the market. And you see down here, you got a red line and a blue line. And it was saying as a running total, which ones were ahead. And you can see right up to 2008, they were neck and neck. Didn't matter what party was in power. They all both produced the same. The Democrats have pulled ahead since 2008 because the 8 years of Obama, the market was doing really well, and only 4 years of Trump. But up to that point, and that was largely due to the 2008 crash that drew it down for, also the 2008 drew it down Bush's, then you could remember the last few. So really it doesn't.
I think as we go through this, we're getting closer and closer to the real point.
Yeah.
That will.
Yeah. So
I'm not gonna give it away just yet.
Now this is another look at how the it says what you remember, the historical narrative is not always as you remember it. I would have expected Jimmy Carter years to be kind of bad years for employment, but this blue line here is the post World War II trend in payroll for non-farm workers. Basically payroll. And you see, Jimmy Carter had some good years. Reagan, you always kind of thought Reagan made arguably the richer. Well, this line here, the black line, is the earnings for the median, the 50% point in the salary range, and they did pretty well. They outperformed the World War, post 1971 trends. They did really well. Barack Obama, is like there's Democrats spending money. You'd expect inflation. Inflation was very low during his years. Perhaps most surprising, and in recent memory, we think of Trump as, the tax cuts and all, business would reinvest and all. This black line are the capital expenditures, the investments in business. And, it's actually fallen behind the long-term trend. So what we perceive, even sometimes in the short term, isn't the way it really is. So that's another thing to remember. I'm going to skip this one. And this is the one where they're talking about, I'm just going to cherry pick some of the.
I like the one up there.
Which one?
The monetary policy matters more.
Yeah, basically it's
that in essence, the Fed has more to do with how the market's doing than necessarily things that the president themselves could be doing.
Yeah, we all think the president's the big mover, but it's really kind of what the Fed's doing with the money supply and things like that. This is an interesting one. Markets don't care if you don't like who's president. And what they've done here is they've ranked the presidents over the years from their presidential approval rating here. And you can see if the approval rating was over 65, the gain during their time was 5%. If it was 50 to 65, it was about 4%. If the approval rating was in the 35 to 50 range, okay, where it was about 40% of the time, they had 15% gain. The best gains were when your approval rating was 35 to 50. However, the ones that fell below 35, they lost money. So what it kind of says is it doesn't matter if we like the president, the market. In fact, the markets have done well when president has less than a 50% approval rating for the most part.
Oh, this is one of my favorite ones.
This is a good one here too. Go ahead. Can you read it here, Sam? Can you?
Oh, wow. Yeah. No, this is not the most vitriolic election. Vitriol has always been a part of our election process. And right now, we sit here and we think that our country has never been so divided. People have never been so cruel to each other. But for those of you, especially those of you who may have watched Hamilton on Disney Plus very recently, one of the most famous duels was when Vice President Aaron Burr dueled Alexander Hamilton over a political argument, and he shot and killed him. So unless they come out and shoot each other in the streets, I think
they start gunning it. Unless they start gunning it out on the Senate floor,
Mm-hmm.
And not to brag, but I saw Hamilton, the original cast, like the month it opened, largely because I have a wife who is really good at picking winners, and she got us tickets about 15 minutes before they became unobtainable. So
yeah, I was trying not to say that to make people jealous, but we did.
Yeah, but, I owe it all to my wife. So she's good at picking the Tony winners. It was a fantastic show. Anyway, and look at George Washington. He said, as much as he loved the free press, he said, with all the invective and disappointment, ignorance and facts and malicious falsehoods could invent to misrepresent my newspapers filled with all the inventive, that disappointment, ignorance of facts and malicious falsehoods could invent to misrepresent my politics. Sounds familiar, huh? What did Thomas Jefferson say? Can you read it, Sam?
Yeah, he said, "Nothing can now be believed which is seen in a newspaper. Truth itself becomes suspicious by being put into that polluted vehicle." So being upset by the news, being upset by what is being said in newspapers and news is not new. It goes back, it is not a new thing for us.
And this is, what index do you want to use? And what these folks at Invesco are suggesting is that you go instead with what they're calling the misery index, which is you add together the unemployment plus inflation, and that's the index to look at, not the stock market, and you can see when the misery index was high, the incumbent lost. And in this, you can see what the misery index did, a big rise this year, and in fact the incumbent has lost. So he said, this is where he's saying that's what's going to predict the stock market. So, people have predicted, he's talking about how when Obama was elected, people predicted the market would crash. When Trump was elected, people predicted the market would crash. Look instead at the unemployment index. So that's a little bit of a look at history. What I have here is a Forbes article and you can see later, if you look at the recording, you can get the reference to where, but it's a Forbes article that kind of covered the current plan versus Biden's plan, and I figured Forbes is a pretty good a pretty good.
Well, that's one of the questions that we've get a lot of is, you know, Biden's going to come in, he's going to raise all of our taxes. What does this mean for our taxes? People are very concerned. And so we've been looking and saying, you know, what is his actual tax plan? And him being able to pass his tax plan also depends upon, you know, what happens with the Senate as well.
So if you look at the current law has tax rates of 10, 12, 22, 24, 32, 35, and 37%. Biden's plan raises the last rate. It raises the rate that's currently 37, goes up to 39.6. So if you're a single person earning more than $520,000 or a married couple earning more than 620, you're going to pay about 2.6% more tax on the money above that amount. For most folks on the call, most of our clients, most retirees, few of them are earning more than that in retirement. So that's probably not going to affect most of the folks on this call. However, I think the expiration of the tax cuts we kicked in will still occur in 2026, but Biden doesn't plan to raise taxes for people earning much less than 500,000. Well, capital gains, long-term capital gains. You know, right now you either pay 0, 15, or 20% on stocks that you've held for more than a year and then you sell. And Biden is going to raise the rate create basically another tier of 39.6%. So if you have stocks and you sell them and have capital gains, you will pay 39.6% if you're earning more than $1 million a year. So I don't think we got a lot of retirees earning more than $1 million a year. So probably for most of us, the capital gains rate will not affect us. Payroll tax. This is the Social Security tax. And this is important because Social Security, we're going to do one of those. If you want to find out, will we run out of Social Security, type it in. Well, I got a presentation on that we can do, but Social Security is due to fall short. We kind of got to make that up. Right now, you and your employer, or if you're self-employed like us, you yourself, pay about 15.3% Social Security, but you pay it only on the first $137,000 that you earn. That's what you know, and then above that, there's no Social Security tax. Well, what the Biden plan has you doing is paying, again, that same amount on the first 137, but then if you earn more than 400, you'll continue to pay that 15% on what you earn above 400. So again, it's going to make a difference if you're working and earning more than 400 because it affects wage.
We have a handful of people who that will be affecting.
We do have some folks that are earning more than 400, and they will see a piece of that. So, but if you have stopped working, it's you know, I won't go into the qualified business interest. That basically that's more than we need to. I'm not going to try to cover it all. Corporate taxes dropped from 35% to 21%. Trump cut corporate taxes to 21%. Biden is going to increase them back up to 28%. And you know, there are a number of corporations earning lots of money that pay no taxes. I think it looks like he is going to put in a minimum tax rate that says if you got more than 100 million in revenue, you got to pay tax on at least 15% of it. So again, and this is perhaps one of the biggest. It's the estate tax. Mm-hmm. If you die with too much money, the government starts taxing what's above that amount, above a certain amount. Take about half, a little less than half. And right now, the amount is like $11 million, $11.58 million per person. You can die and leave $1 million to your heirs with no taxes. Biden's plan is to drop that back to 3.5 million, which is where it was a few years ago. So that means a couple could leave 7 million without taxes, but there are couples that have more than that, families that have more than that, especially family businesses and such. And we advisors used to go through a lot of hoops with fancy trust and all to avoid that. We maybe end up doing that again. Again, got to get taxes from somewhere, and dead people don't vote. So it's been a popular place to get taxes. So that's kind of the piece there. I want to show you one or two things of my own that you need where I think we should worry.
Hey, Dad, can I share something just for a second?
Sure.
It was something I had seen that I thought that was in that article, but I realized it wasn't.
Okay.
I need you to stop sharing. Just for 1 second, and I will. Okay.
This is a good one.
I just think at its essence is that everybody, every time there's an election and every time the power changes between Republicans and Democrats, and I know that this year is especially contentious, but everyone's always worried about it. But ultimately, the trends, while there's volatility, the trends always trend ultimately upwards. So I think that it's important not to feel like Chicken Little running around with your head cut off. You know, the sky's not falling. It's going to be okay. There, you know, as he's about to say, there are things that we should be worried about perhaps, but I think ultimately the election itself is probably not going to have a huge impact on the market. I'll let you go back.
Okay.
But
one last year, because we're running close to time here.
Okay.
I just want to give another input here from when you go buy a house, the size of the house, Sam, you just bought a house. When they were going to finance your house, or you went to a mortgage company, how do they determine how big a house you can afford, how much you can spend?
Man, I had to submit them, I had to like.
But what was it? What was the key number they were looking at?
My income?
Yeah, your income. So it's common sense that when you're going to go into debt, they'll say your monthly payment can be 30% of your mortgage, and they balance those out. This here is the federal debt as a percentage of gross domestic product, of the money the country's making. Okay. You can see during the Civil War, we got up to 25%, and then we paid it down with taxes. In World War I, we got up to 25%. We came down. In World War II, we got up to nearly 125%. In other words, our debt was 125% of all the money that the country made. And then we brought it back down with taxes, and now it's back up to 125. This is a graph we've used in our classes time and time again. And it is the highest marginal rate over time. And, we didn't have a federal income tax to 1913. It was about like 7% then. And you can see with World War I, the highest marginal rate is if you're really earning a lot of money, what they're taxing those last dollars. In World War I, it went up to 70, 80%, came back down. World War II, it went back up to a high of 94%. There was a time, this is a story about Reagan, when he was making movies, If you earned over $100,000, they tax the rest at 94%. He earned, or maybe it was 200,000, and he earned 100,000 a movie, so he never make more than 2 movies a year. And then it came back down, and we've actually had fairly low tax rates. But again, you know, we are back up here in this 100%. What personally worries me is we had good excuses for these 3 deficits. We were fighting a war. We were got to take the Nazis down and crank out all those planes and tanks and everything else. Right now, we're back up to that same level, and we're not fighting the, you know, we are, some of this was COVID, but over the last 40 years, 30 years, we've kind of got into this profligate spending mode. We've got to pay this down. And so it's very likely that we're going to see high tax rates again to pay this down. So if you're on this call, you should be thinking about strategies to reduce taxes on my retirement. That's why we often have all those presentations in the last 22 on Roth conversions and what determines tax. Whoever's in power, Democrat, Republican, whatever other party comes up, they're going to have to fix this. We as a country have to fix this.
At some point. We
At
don't
some
know
po-
when. And that's
Boy,
the problem whenever you have tax deferred accounts, is that you're in a business relationship with the IRS, with the government, and they can change how much their share is at any point without your say.
and most of the wealth of the country is tied up in 401ks and IRAs, and they're sitting ducks for the government. But this tells me taxes in the future are going to have to go up, or we're going to have to cut spending on things like Social Security and social program. You know, basically, their taxes are going to go up in the future, and you need to be thinking that way. It doesn't matter what parties in. Both parties have been profligate in driving and spending more than they're making these last 30 so years. We need to fix it. So
And then I think to touch back on everything with the election, and is the sky falling? What's going to happen? Is everything going to crash? You know, all of our clients, we've sat down and we've gone through risk with them. We've gone through a risk analysis, and we believe that your retirement success, you know, we've built a plan for you to be successful no matter what the market does. And that's part of what we do, is we're not trying to time the market. We're not trying to get in, get out. You know, we want something that's a solid plan for, you know, to weather any storm. We look at what's happening and we think this is kind of just noise. But ultimately what you need to have is a plan that can weather this, and it can anticipate something like volatility happening.
well, while we're getting the drawing ready, let's see who else we have to say hi to. Where did we leave off? We got
I don't know.
let me go up here. I may not get to say hi to everybody, but we've got I think Bruce, we talked about Bruce. Norm's here. Hi, Norm. Lynn, Patrick, Tallulah. Hey, Tallulah. Shirley and her husband are here. Anthony is here. Robert Krieger is here, or I shouldn't say the last names, right? Cindy, Jean's here. Hi, Jean. Deborah, and Dan, Valerie, and Heidi. Heidi's here, friend of Sam's, and Lynn, and Dwayne, Bruce, Valerie. Boy, got a lot of folks.
Joining us.
Hey, Nadine.
And thanks everyone for bearing with us when we we had this beautiful PowerPoint all put together. Thank you for bearing with us as we kind of fumbled through this, but we pulled it together. And so we have our wine drawing.
Before we do the drawing, I want to mention one other thing. There's some folks on this call that that are guests or just coming in or have found it through a watch party. If you would like to, one is, I want you to go to a site, rogo.com, ROGO.com. That's our education only site. We got lots of little educational pieces there on tax, especially taxes and Social Security and all. Some of you may want to get your, may want to have a chat about your own situation and have a question that you'd like to have answered. You can respond to the email if you got this by email and say, hey, book me in for a phone call, or you can call 815-30-100 or go to our Facebook page, look up our phone number, send info@carolinarp.com and just say, hey, I'd like to get together with Sam or David. We can have a 15-minute phone call, talk about your situation. But if you sit through our jokes here on Happy Half Hour, that's one of the advantages you have. So, and we got, this morning we were showing folks how we can run the Social Security reports. We've got some really interesting tax reports. If you go down through this Facebook and look at some of the old ones, you'll see all the neat stuff.
Yeah, now after today, we've got 22 of them. All right, so we're doing our drawing. So just as a reminder to enter our drawing, pretty much just contact us and let us know you want to enter in any way you can. Respond to any of our emails or our videos that we send throughout the week. Send us a Facebook message, give us a call, say, enter me in the wine drawing, however you want to. Refer a friend to our Happy Half Hours. We want to give you wine. And I was thinking about it. I think that this may be my favorite part because, and somebody had emailed us and had mentioned that they never win anything, and that they have bad luck. I am also one of those people. I never win anything. I'm the worst raffle person. And so I think it's nice. I have this this power. It's like I've taken the power back of the raffle. So our winner this week, for 2 bottles of wine delivered directly to your house
by a uniformed employee of the U.S. government, Yes,
from Fermental Bottle Shop in Ogden is, and I'm excited because they enter like every week too. Kay and Ken. So
yes.
Yeah, I write their name down so many times.
Very regulars. Kay and Ken, congratulations.
Congratulations. You have won 2 bottles of wine. And so hopefully you will join us next week, sipping on your wine.
Okay. Well, I wish I could have answered. I see some questions came in, but boy, we are at just a little over the half hour. We like to keep it there. Maybe we'll also have every few weeks, we do a question only. We put the questions together. So with that, it is the official, happy hour day. This is happy hour day.
Yes.
Carolina,
happy hour.
We welcome you. Lots of happiness. So we will see you next Thursday, 4:30. Cheers.